Revenue expenditure. Now in revenue expenditure there are 6 items. Okay, there are 6 items. So in revenue expenditure there are 6 items. Clear? Okay, so in revenue expenditure there are 6 items. Number 1, what are those items? Number 1, administrative expenses. Administrative expenses which include your salaries, comma, pension, as well as other expenses. So when I am saying administrative expenses, it include your administrative expenses include salaries, pension, as well as other expenses, means to run the government departments. So tomorrow when you become bureaucrat, so and you are working for central government, so your salary will come from Consolidated Fund of India. Okay, so your salary will come from Consolidated Fund of India, and that will be a part of administrative expenses. Similarly, if you get pension, like Supreme Court judge, okay, they get the pension. Okay, so for example, Supreme Court judge, so that will be a part, or you will say, coming from Consolidated Fund of India, that is under revenue expenditure. Similarly, to run your department, you need stationery items, you need laptop, you need mobile phone, whatever for the department. So you need expenditure for that, money for that. So that will be a part of administrative expenses. Clear? So administrative expenses include these things. Clear? Number 1. Similarly, if you have to conduct any official meeting, okay, so for that there is expenditure. Okay, so all that expenditure is a part of administrative expenses. Clear? Okay, next, second, subsidies. Now Government of India gives subsidies like for food, fertilizer and crude oil, or you can say fossil fuels. Okay, so ultimately subsidies given by the Government of India. Okay, so ultimately we are talking about administrative expenses done by Government of India. Okay, subsidies given by Government of India is part of revenue expenditure. Okay, so when I am saying it is a part of revenue expenditure, means all this money will come from Consolidated Fund of India. It will not come from public account. It will not come from contingency. It will come from where? Consolidated Fund of India. Number 3, when it comes to government schemes, so government schemes, they are also the part of Consolidated Fund of India, means this is also a part of revenue expenditure coming from Consolidated Fund of India. For example, there are 2 types of schemes: central sector scheme and centrally sponsored scheme. So when we talk about central sector scheme, here Government of India gives 100% money, that is 100% cost. Whereas in centrally sponsored scheme, you can say the cost of the expenditure, or you can say cost for running that scheme, will be shared between central government and state government in some proportion. It can be any 50-50, 60-40, 70-30, 90-10, whatever. So we are not interested in that. So you must understand whatever government schemes that government is running. For example, MG Narega. For example, MG Narega. Another, for example, Ujjwala scheme, PM Ujjwala scheme. So many schemes are there. All for these schemes, whatever money is coming, that is a part of revenue expenditure. Number 4, you can say defense expenditure. Okay, you can say defense expenditure. Clear? So whatever defense expenditure that Government of India is doing, okay, whatever defense expenditure that Government of India is doing, that is a part of revenue expenditure. Number 5, interest paid by government of India. Interest paid by the government of India. So ultimately we have seen, or as I told you, that whenever you take a loan, so there are two components. One is principal amount, another is interest. So if you see here, we have talked about that government of India used to take borrowing. So whatever borrowing they are taking, so for that they have to give interest. Okay. So ultimately, if suppose government of India has taken a borrowing for 10 years, okay, for 10 years, okay, so for that 10 years they have to pay interest. Okay, they have to pay interest. Okay, so that will be a part of revenue expenditure. And number 6, okay, number 6, grants given by government of India to anyone. To anyone means it can be given to anyone, means you can give grants to, you can say either to the states or to any foreign government. Okay, so that is your wish, or you can say that is government of India's wish. But whatever grants they are giving, again that will come from consolidated fund of India. Okay, so one student is asking about grant expenditure. So I hope now you understand that this is a part of revenue expenditure. So it is like this: whenever any relative come to your house, so you receive grants from them. Okay, so which you initially deny, no, I don't want, but later on you keep it. Okay, so that is what grants received by you. Okay, grants received by you is a part of, if suppose you are receiving the grants, so that will become a part of revenue receipts. Okay, and in revenue receipts, it is a part of non-tax revenue receipt. Clear? Whereas sometimes you go to relative house also, so you also have to give the grant. Then you think a lot, shall I give or not? Shall I give 1000 rupees, 2000 or 500? Then later on, okay, 500 is the, okay. So ultimately, if you are giving grants to your relatives, okay, similarly government of India used to give grants to states, okay, or you can say foreign government. So that will become a part of revenue expenditure. Clear? Till here it is clear? Okay. Now moving further, we'll talk about capital expenditure. Okay, capital expenditure. Now in capital expenditure there are 3 items. Okay, there are 3 items. Number 1 is money spent on infrastructure. Money spent on infrastructure is a part of capital expenditure. Clear? Clear? It is a part of capital expenditure. Number 1. Number 2. Now, government of India. So we have talked about in capital, or you can say non-tax revenue receipt, that government receives interest. So whenever they are receiving interest, it means they have to give principal amount. So whenever government of India gives loan to anyone, okay, so whenever government of India gives loan to anyone, so when I am saying anyone, it means either to the state government or foreign government. Okay, so when I am saying anyone, so either it is either to the state government or foreign government. Okay, so loan to anyone, that is either to the state government or to anyone. Number 1. Okay, number 2, number 3. Now when we are saying government of India has taken a borrowing, okay, so ultimately whatever borrowing or principal amount they receive, that will be a part of capital receipt. But in future they have to return that amount also. So you can say returning of principal amount by the government of India, that will become part of capital expenditure. Okay, returning of loan oblique principal amount by government of India, that will become part of capital expenditure. Now most of the student has confusion in this, So again I am telling you, see case 1. So you can understand in this way, case 1, Government of India is taking loan. Okay, Government of India is taking loan. So that will be a part of, okay, that will become a part of capital receipt. So this is case 1, that Government of India is taking loan. So that loan can be taken for 1 year, 2 year, 3 year, 4 year, 5 year, 10 year, 20 year, 30 year. We are not interested in that. We know that government is taking loan. Okay, so that will become a part of capital receipt. Now for this loan, government will pay interest. Okay, so whenever interest paid by Government of India, that will be a part of, you can say, revenue expenditure. So I have made you write, you can see 5th point that I have made you write. Okay, plus now once time period is over, so government has taken, for example, loan for 5 years. So this year government has taken loan. So this year it is 2024. Okay, 2024, for 5 years government has taken the loan. Okay, for how many years? For 5 years. Okay, now till 5 years government will pay. Okay, so for example I am just taking small number. For example, government has taken a loan of 10 lakh rupees. So for 5 years government will pay interest over that. Okay, that is for 10 lakh rupees. So it means for every year, for example, government is paying, for example, 1 lakh. So it means government will pay interest every year 1 lakh each. Okay, 1 lakh each means 5 lakh rupees will be given interest payment in 5 years. That is 1 lakh every year. Okay, now once 5 year get over, once your 5 year get over, so this 10 lakh has to be returned. Okay, so it means in the year 2029. Okay, so government will say that now we are returning the loan. Okay, so that returning of principal amount again become a part of capital expenditure. Okay. Principal amount, or you can say returning of loan. Okay, that will become a part of capital expenditure. So this is what you have to remember. Clear? Clear? Case 2. Case 2. Now here we have seen in case 1, Government of India is taking loan. Now Government of India is giving loans. Okay. Government of India is giving loan. Okay, so when Government of India is giving loan, it is a part of capital expenditure. Okay, it is a part of capital expenditure. Clear? Now government will receive interest for this amount. So interest received by government, that will become a part of, you can say, non-tax revenue receipt. Non-tax revenue receipt, and no doubt whatever Government of India has given a loan, they will recover that amount. Okay, after some time. Okay, so recovery of loan will be a part of, you can say, capital receipt. I hope till here it is clear.